So crypto trading can be a very lucrative way to make some money, and with digital assets, you also have to understand that the market can be very volatile. It requires actually more than just buying low and selling high. With advanced trading strategies, investors can actually manage their risk, make informed decisions, and maximize profits. I'll discuss in the videos various ways to do it. So with technical analysis, you can actually make money both ways, whether it goes up or whether it goes down. So the biggest thing you can learn about is candlestick charts. So with candlesticks, you have actually the most popular way to visualize how the market is actually doing. Traders use these charts to identify strengths, identify whether something is going in an uptrend or in a low trend. They actually see the resistance levels and other patterns that can inform you with trading decisions. So then you have moving averages, which actually is being used by not just identify trends, but also smooth out price movements. A lot of traders are using a combination of different moving averages to make informed decisions. And then you also have the relative strength index, also shortened as RSI. RSI is an indicator which tells you whether something is overbought or oversold. And with this identification, it can be useful as a trader to determine whether you want to buy or sell a cryptocurrency signal. And then besides technical trading, you also have fundamental analysis. So because the world of cryptocurrency is so small, any small news outlet can actually make your cryptocurrency go all the way up or go to zero in a few days, whether something really bad happens. Traders can use news and events to inform their own decision strategy. For example, positive news about some project can actually lead to a price increase, while negative news can lead to the opposite and decrease in price. Besides that, you also have a gut feeling, which is market sentiment. The market sentiment actually refers to an overall mood, which is kind of the feeling of the market. Traders can use the market sentiment to see if there is a high level of greed or fear. So for example, if you go to the Bitcoin Fear and Greed Index, you can see how in general traders are feeling about this particular cryptocurrency. And then you can also make an informed decision with that. And then you have coin metrics. Coin metrics, you can actually refer to data points that can be used to see the overall health of a specific cryptocurrency token. And these metrics can actually include something like transaction volume, network hash rate, and on-chain activity. Besides all that, you also have risk management, which you need to be able to tolerate. So some strategies are stop loss orders. These are automatically used to sell a cryptocurrency when the price goes lower than the money that you set. Stop loss orders are actually used to automatically sell a cryptocurrency coin digitally without you being there, by setting the price that you want them to sell. And this can help traders to actually limit their losses by a market downturn, or even keep profitable when you have a very high profit rate and you want to stay under a limit. So if this was your price and the price has gone to here, you can put your stop loss here. So even if the market goes lower, you still are in profit, because you are not going to lose when the market drops all the way down. And then you also have position sizing, which actually refers to the amount of money or capital that you have in a specific cryptocurrency project. And with this information, you can actually inform your own decision how much you actually want to strengthen one position and invest in another trade, which also leads to diversification. By spreading your investment across different projects, you can actually decrease your risk, and this can help to reduce your losses in an eventually downturn. And this helps your portfolio as well in case of market fluctuations. So if I summarize this video, which is not just buying low and selling high, it's more of an advanced strategy, which includes you to make informed decisions as a trader by using technical analysis, managing risk, maximize profits by also minimizing your losses. And this can be used by technical analysis and fundamental analysis, market sentiment, and things like stop loss orders, position sizing, and diversification to increase your profits and minimize your losses. And with this rapidly growing market, you can make a lot of profit, but you can also lose a lot. So only invest with your own informed decision. And like everyone says, do your own research. And if you want to see what I actually do, I usually focus on a few things. And this is the video where you can see how I actually continue. So go over there.